Another day, another crazy move in the crypto market. Bitcoin right now is sitting at $93,000 and some change. And a lot of people are wondering what exactly is going on? Why did the price decide to fall so much? And of course, one of the most important questions, should we be worried? Well, ladies and gents, today, let's talk about exactly that. Now, first of all, let me tell you, whenever Bitcoin falls a little bit, there's going to be these characters that are always going to put up a big show and make it seem like this is where the cookie starts to crumble. This is where everything is only going to start going lower and lower. And it hits a lot of people in the sense that many people get doubtful. And that's why they call it FUD, fear, uncertainty, and doubt. Because ultimately, if some very big spearheads, people with a ton of followers start instilling all this fear, and they're starting to make you question, well, it causes a little bit of a chain reaction. Some people fear these dips get deeper. And obviously also what is happening ultimately is the more that prices fall, the more longs, which are people that expect the price to go up, get liquidated, which ultimately gets an extra bit of a cascade going. So when it comes to crypto prices, it often is big cascades because our industry is just so small. Anyway, one of the biggest bears, Peter Brand, sounds the alarm on Bitcoin. Bulls buckle up. So an interesting little part. He just said, charts morph all the time. This is why we should never trust any given pattern. Intraday charts morph into daily charts, into weekly charts, into monthly trends. Until we get a chart that works, Bitcoin, major trend remains up, but daily chart tracing out a head and shoulder top. This pattern might take prices to 73,000, or it might morph into something else. Charts do not predict prices or trends. Charts fail all the time. The real value of charting is to time periodic asymmetric bets. My historic win rate on trades is 50% and change. Historically, only 15% of my trades make my income. The other 85% cancel each other out. For trolls that condemn charting because it's very Bayesian, I would say get a real life. And my response to that is, we often talk about trading on this channel, and I always have some trades open. For example, here, these trades are still in some profit, not much anymore, but still in some sort of profit. But of course, we still have the other trades open on Bybit with some significantly more profit. But take a look at this, right? We often talk about it. Even if you lose a couple times or you look bad for a while, with the way we trade on the channel here, which is more of these bigger swings, think about it, right? We said, hey, if you want a place to load off, $2.50 could be a good mark. Again, like I also said when prices got to the level, you never know for sure, but it's just psychologically a very important barrier. Maybe you sold at $2.50 and it went all the way through to $5. You never really know. And that's why I'm not so keen to sell, because I do believe prices will be going way higher. But on the short term, that was the most important significant barrier, which is what we said when it hit $2 or like something like that, $1.99 before. Anyway, after $2.50, you could have sold right there. Even if you didn't, maybe you were actually buying in. Well, right now, the price just went to $2.20, and it's actually up 6.5% from that bottom. Your average price as of this point, even if you started buying at $2.50, should not be higher than $2.30, right? Just thinking about it. You could have bought at $2.50, $2, let's call it 20. Your average price can be a little bit higher, sure, but not more than $2.30 or maximum $2.35, right? So right now you should be either in neutral or slightly positive territory. And that's the idea. Like right now, for example, we're getting back to a resistance, at least in the past, has acted as some resistance for XRP. But think about it. Think about it real properly here. If you just keep following that strategy, you're only basically cooked if the price drops by a crazy margin in a very short amount of time and you don't have any more funds to buy that dip. But generally speaking, even if your charting is wrong half the time, right? Think about it. Half the time, even if it's wrong half the time, as long as you're not taking the shortest of short-term trades, you still ultimately might completely be fine. For example, in this case here, our chart picked $2.50, but $2.50, which was amazing. But let's just say we skipped that level and we were wrong. Well, I mean, in this case here, we were wrong. Let's just say, because we didn't pick it. We were still opening the position. We still have it open and we were wrong, but we're still in profit. We're still fine. Even theoretically speaking, if we were wrong and we just adjusted by buying the dip, for example, afterwards at $2.20, for example, even though we were wrong initially, we bought again. And even if we were wrong, right? And this was, for example, not a perfect bottom to buy, this area, right? This was not a good bottom. And we fell all the way back down to $2. Well, that's happened multiple times in the past. And if we just, every single time it got to the level, bought a ton, ultimately would still be right, even though we might have not expected it to turn around back there. at those levels, we were still ultimately right. I don't know if that makes sense. To me, it does, but ultimately that's also because I just always buy the freaking dip. And whenever people get so scared around me, I just always kind of instinctively laugh a little bit. Same for when people try to figure out exactly what caused prices to come back down. Very often it's on the macro side. Macro is doing bad today. Anyway, the price came falling down amid strong economic data in the US. So that's unsettling news for Bitcoin. Well, their previous bullish optimism was built on the combination of the central bank aggressively cutting interest rates and Donald Trump's second presidency ushering in regulatory clarity for crypto. Quote, in the absence of a fresh narrative for crypto to latch onto, the market is currently tracking traditional finance habits by Philip Pieper, co-founder of SolarMarkets 𝗕𝗓𝗪𝗧𝗧. Investors' appetite for riskier assets like crypto and tech stocks tend to increase when interest rates are low, which motivated traders to chase higher returns. Pieper said the current febrile market conditions will persist, oh, my phone almost fell, until investors have greater clarity on what the Trump administration's crypto policies are. And that's where I kind of already disagree, because the only thing I'm thinking is maybe people are buying the rumors, selling the news, on the idea that Trump is going to hit the office, as he's going to be hitting it in like 2 weeks from now. But I don't think his policy can be that bad. Anyway, they cited, or actually let's take a step back, macroeconomic data will remain crucial for forecasting Bitcoin's price, analysts at Crypto Research, whatever group said. They cited the Fed's response to strong economic data in the US and global liquidity as two major macro drivers of Bitcoin's price. Bitcoin in the short term could slip into the banana zone created by both macro factors. The banana zone describes a range of volatile price movements by an asset. It derives its name from the shape and because things tend to go a bit bananas in it. BitMEX founder Arthur Hayes also referenced dollar liquidity and its impact on Bitcoin's price in his latest blog post. Hayes said Bitcoin and crypto prices rally when dollar liquidity increases. And ultimately, you can read as much as you want, but the idea still remains the same. On the short term, things are a bit scary. On the short term, things are a bit wobbly. On the short term, things are a bit shaky. But ultimately, we're actually in one of the lowest volatility times for Bitcoin in a long time. Matter of fact, Miles recently posted here, Bitcoin volatility is actually historically quite low right now, almost 3 times lower than the 2021 bull run. In other words, Bitcoin is sitting at $100,000 with compressing volatility. You know what happens next? Well, quickly after he said that, prices decided to fall with some pretty large severity, as we're down $10,000 from whenever this post was made, I believe, just a day or two ago. Because I think we were at 102,500, so 102.5. Right now we're at 93.5, something like that. So we're down like 10K since this post was made. I guess a 10% move-ish is quite significant. But then again, maybe on Bitcoin, for bull markets and how much it moves at those, normally, I guess it is indeed quite low. Even with the price moving like $10,000 right now, it's still relatively, I'd say, quite low indeed. And that brings me up to another point. Man, I'm just really going hard on this AI sector, guys. And also, DeFi Square just posted as well. Now we're never round 2, bidding virtual with size at 322.5. I think we're extremely overextended already and pretty close to bouncing. I'm going to tell you right now, right? A lot of these major coins, they just keep bouncing back. Even if you're just talking about XRP, Ethereum, Phantom, you name it, right? Name your coin. If they're at the top of the top and you've noticed that every single time they go for a crazy correction, they bounce back, the probability that the bull market's over is pretty low. So from that perspective, you just hammer on buying that dip. And again, if you're looking for a platform to buy the dip on, you're looking for an exchange to trade on, check the link down below to either Blowfin or maybe even WeX. And make sure you press that like button, by the way, if you haven't done it yet. But I seriously just follow the exact strategy I keep talking about here every single day. Buy the dip, and if it dips further, I buy it again. If you comment, but I don't have any money, then you've not been good at selling the top, which is okay if you're a hodler, not that much so if you are a trader. But if you're a hodler, then all that you have to care about is these major levels. Or there's, in my opinion, 2 good strategies. One is buy consistently, consecutively. You buy either every day, every week, every month, every year, whatever, right? But consistently you buy. So your average price just averages out to a pretty good level. Number 1. Number 2 is you buy when things get excessively undervalued. For example, you might look at things like the RSI. Take a look at when things are oversold, or when, for example, these major psychological barriers on the downside are hit. For example, XRP below $2, XRP below $1.50, etc., etc. You wait for these good opportunities, and the same for if you want to trade with the lowest amount of risk. In my opinion, that's also one of the ways to do it. For example, you will start only if XRP hits $2 or below. This might never happen. This might happen in a week or so. And it could fall further, but at least you're getting yourself, let's call it a 33% discount from one of the top points and a pretty good discount from prices right now. And generally speaking, $2 is where it bounced off all these previous times, maybe $1.90 or so. So if that's your starting price, even though it might not bounce straight away, if you start averaging in from that level downwards, it's very, very hard to fail, in my opinion. Unless Bitcoin, of course, kicks the bucket and starts going to 70,000, but hey, what are the chances of that, huh? Anyway, that's my strategy for right now. Hopefully you guys are doing well. If you are, make sure you press that like button, put the notification bell on so you're always notified whenever something crazy happens. And that's about it for today.